What is going on YouTube? It's Sam. We are back with another one. Now in this drop, coming at you guys with a couple of plays and I bring to attention. Before I kick things off, I'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, that kicks off a fresh new week in these markets. Now in this drop, I'm looking to put a few plays on your radar to ensure that you guys are moving in the right lanes as we continue through this week. But before I get to those plays guys, I want to give you some coverage on the market. Now the market could just about handle the high levels of inflation that we're seeing at the moment. But when you add that to the onset of the Delta variant, it's just a bit too much for these markets to handle. So with cases rising in Europe, in Asia, 70% up in the US last week, the market is thinking of the worst case situation and that it's going to derail economic growth. So that's why you've seen the markets come down today across the board. Different industries, whether that's industrials, whether that's energy, whether that's materials, they were down on the day. Now it's been a long time since I've seen the S&P 500 down 2% in a day, so it just shows you the high level of selling pressure we're seeing at the moment. Now it's inevitable that when these mega cap stocks come down, it's going to feed through to a lot of the large cap plays and the mid cap plays where a lot of our plays are positioned. Now, despite all of that, guys, you would have still seen some of our plays showing some stability out there in the markets, and some of these plays even making a recovery after the initial pullback after the markets open up, which is a good sign because the S&P 500 can still come down further from its current level. So it's good to see a little bit of independence from that. And if the S&P was to come down, say it's early signs that some of these growth plays could show a degree of price strength where they're currently at. Now the saving grace in these markets that we should still be expecting very strong earnings growth as we roll out over the next couple of weeks, which should provide some current in the opposite direction from where these markets are currently moving. So that being said, I've still been keeping busy in these markets. So as always in this one, I've got a jam-packed one for you. So let's run the first one. So we're going to kick things off here. That's ticker symbol GRWG. That's Grow Generation. Now from these levels, there's heaps of upside in this place. So I'm going to make sure this one's on your radar this week. Now we know the markets reacted adversely last week to the updates and the legislative moves that we saw in the industry. But that's a complete market overreaction and the stock price is still down off the back of that pullback, which we can take full advantage of. Now we know this has been a volatile play over the last couple of weeks. Just 2 weeks ago, we saw this one above $50. Now this one's under 40, where good entry can be made. Because check this out. Since March, we've seen this one show some good level of support at that mid 30s to low 30s. Okay, so around that $37 to $34 mark. So say good entry can be made at these levels in anticipation of a bounce back in good timing. Now I'll let you guys know if we continue to see headwinds in the markets, I'm expecting this play to move with the tide. So we could see this one drop down into the mid 30s, around that $35 mark. If we continue to see extended pullback in the markets, we could see this one drop down to 33. But I'll let you guys know those are very, very attractive entry prices on this one. As I say, I'm expecting a bounce back. Now their earnings are coming up around the 2nd or 3rd week of August. And as always, I'm expecting a blowout performance from this play. And that's because all their retail stores they've been opening will be firing up, and all the acquisitions they've been making over the last couple of months is going to continue to give them further reach and scale in the industry. The next one I've got for that's ticker symbol DAC, that's the nails. This is our ship and play. Now this is just an example on the day, on a weekday in the markets across the board, we have one of our plays showing some strength up 2% on the day. Okay, now I say this is a play that despite the headwinds and what's going on in the global market, the shipping industry is still firing on all cylinders. Okay, that's probably why you've seen some strength in that stock price today, and there's a lot more room for this one to climb. So ahead of their earnings, so you guys want to ensure you've got your position on this one, because it's just going to remind the street of how powerful those revenues and their profitability is. Now in terms of how we move this play going forward over the next couple of sessions, guys, you really want to be into this play no higher than $65. So right now currently 63. If we do get blessed by some additional pullback in this one over the next couple of sessions, make sure that you guys take full advantage of it. Get your positions ready for the climb in this play. Now I'm holding about 80 shares in this one, and I'm continuing to build my position in weakness, as I say, in anticipation of that rise in the stock price. I'm expecting this one to move up closer to that $90 region, as I say, in good timing. Our next play, that's ticker symbol IIPR, that's Innovative Industrial Properties. Now I've seen this one on a bit of a cool off today, down 3%, so I'm going to bring this one to attention. Right now they're standing $202. We like this play under $200 to make first entry on this one. As I say, moving forward over the week, we continue to see those headwinds. We could see this one dip into the buy zone. This is a great play to add to your portfolio give you guys a little bit of diversification because we've got a REIT on our hands, and this brings a different dynamic to the portfolio. Now, like the business model, it's all about stable, predictable cash flows in this one, and there's a lot of upside because they've got a growth element to them. So it's a good blend. It's the best of both worlds in this play. So if haven't made entry, if you're looking to load up your existing position, if you're a little bit light on this one, we're going to do so under $200 if we catch them in the buy zone this week. Now, I want you guys to know there's a ton of plays I could have chosen for my last one, but just to reiterate my conviction in this one, that's ticker symbol M. We've got Macy's. You already know every week I'll drop 1 or 2 new gems for you guys as options for you to add to the portfolio. This is our newest member of the team. This one's down 5% on the day, down 15% on the week. Now, with this level of volatility comes big opportunity. Okay, so check this out on the 3-month stock price. This one's now trending very close to their 3-month low. So they're still within that 3-month channel. You already know picking up plays that are at their 3-month low in this kind of market brings good opportunities. And on the 1 year, we've seen this one at this type of level around that $15, $16 mark. It was only a few sessions later we saw this one at $20 earlier in the year. Okay, now we are going, as I say, into earnings season. I'm expecting to post up some phenomenal numbers. You're already seeing the retail is picking up, consumers spending more, their buying power is high. We know there's that pent up demand to spend, and it's all event driven, whether that's socials, whether that's back to school, different themes and events is causing that increase in consumer spending, and this is the play just positioned in the sweet spot to benefit off the back of that. So if you rock with the channel, you know what time it is. Do you anticipate a further pullback in the market? If so, should we wait before buying the dip or average on the way down? So to wrap this up and the shares from you guys, let me break it down for you. Now, in terms of can markets come down lower? Of course, guys, we've got a lot of headwinds in the market right now, like inflation, like the Delta variant, that could still continue to rock these markets. Now, if the S&P comes down further, and it can do because it's just coming off the back of an all-time high, that's going to have trickle-down effects into the large cap plays, into the mid cap plays, as I say, where a lot of our stocks are positioned, so you can see them come down a notch or two. Now, does this mean that you should hold back from the market? No, you should be continuing to be active, get busy in these markets, continue to pick up these plays on the cheap, from the very fact is that you cannot time these markets. And as I say, the saving grace in the stock market right now is the strong earnings profile from these plays, which should help keep them propped up, or could provide that additional boost, or could get the stock market back on track. So you can't time the market, so you want to continue, as I say, to be active. If you're on standby, you're missing out on great prices because of fear that they could come down lower. So the best thing is that you ease yourself into the plays, as I've been saying to you over the last couple of weeks. Grab a position today, grab a position tomorrow, okay? Just make sure that you guys are making great entry on these plays at low price points in anticipation of the rebound, and the rebound is coming. When we had the last major drop in the stock market back in the middle of May, a lot of these plays popped over a couple of sessions. You saw them move up 20%, 25, 30% over a couple of sessions. Now, if you did not invest at the low or on the way down, you'd have missed all of those gains on the way back up. So the key thing as wise investors, you want to stay active in these markets. Don't let fear stop you from getting into these plays. Now, I want to say something to you guys, and this. You don't want to have a spray and pray type of operation here. I know a lot of your plays, you might have an opportunity to dollar cost average down on the low. You want to be selective with your plays and get into high conviction plays. So that wraps up for this one. If you've got any questions for me, drop them down below and I'll get back to you. As always, I want to say I appreciate you guys. On your way out, do like that comment section for me. If you're new, join the movement, and I'll catch you guys in the next one.